why it is understandable in recent market turbulence as people panicking over their 401k retirement funds. But we have ridden this roller coaster many times before, and our next guest says the only ones who get hurt are the ones who jump off in the middle of the ride.
Yes, Ramsey Solutions founder and CEO and author of the book, Build a Business You Love, Dave Ramsey, joins us now, and we're so happy to have you to hear some calm in this little bit of a market panic storm, Dave. You know, ultimately people get scared. Their instinct is to sell when you've hit a bottom, when the best thing that you could do is hold on, you know, not really focus on the volatility. We don't have a systemic problem here. It's a policy-driven issue right now that probably will work itself out.
You're exactly right. I mean, David, you remember you and I did a little thing for a couple million people called Town Hall for Hope in 2008.
Well.
And we flew out to Oklahoma City, and thank you for that. You know, that time the Dow went from 13,000 to 6,700. Don't you wish you'd bought at the bottom there? Oh my goodness.
Absolutely.
And so, yeah, around here we just say real investors take the long view. So if you freak out, zoom out. Back up a little bit. Let's say, okay, the S&P 500, last 25 years we've had 6 down years. 2023, we had a 26% rate of return. 2024, we had a 23% rate of return. In the last 5 years, including today, we've still got a 78% rate of return. That's a 15% average annual. Oh, remember the Fauci pandemic when the market dropped 34% in 2 months? 2020? Fully recovered and made a 16% rate of return that year, the other side of that little dip. And that was a deeper cut than we've seen in the last week or so. So calm down. You didn't lose your money, and you don't lose anything till you sell. Just ride the coaster, like you said, and pan back and look at the big picture. Where do you really believe America's going to be 5 years from now? Oh, a lot better off than we are today.
So you never sell in a panic. I think we all agree on that. But the question is when you buy in, and you mentioned those sweet spots that we wish we could have bought in at. And we've got a chart. There's something called the VIX out there. It's a volatility index. When that goes way up, stocks go way down. There are 3 times in the past 35 years that it hits that 60 point way up there, and one of them was 2009. You mentioned that when you and I got together. That was the financial crisis. Spring of 2020 was another one, the pandemic, and then another one was yesterday. So is now the time to buy?
Probably. I don't know what the bottom of this is. Obviously, none of us have a crystal ball. And really, though, the research tells us that those who try to time the market generally don't do a good job, because we generally jump out at exactly the wrong time and in at exactly the wrong time. So let me tell you what I'm doing. Constantly investing like I have for 40 years. And it's made me a lot of money.
I bet it has. And as you mentioned in those stats, market stats, a lot of people have made a lot of money. But people who are closer to retirement are going to be a little bit more nervous than somebody who's younger, who has a longer time horizon and can wait it out for that recovery. And I'm not, you know, disparaging people who are invested in stocks and they're close to their retirement age. But shouldn't you at a certain point, Dave, start to also think about not having as much risk in your portfolio if you plan on retiring soon, and diversifying, maybe looking at bonds as another option to have a little bit more safety? You know, because some of these folks are fully invested in stocks and now they want to retire. That might be a little difficult.
You know, it really, no, I haven't adopted that theory. I'm 64 and I'm staying fully in the market.
Wow.
And here's why. If you've got a 401k and you got $1 million in it, you're not really going to touch the $1 million. You're really going to live off of the 80 or 90,000 a year that it produces in income. And so it's not like that. And if you're 64, by the way, statistically, the actuarial tables say you're going to be living until 92. So you still got 30 years to outpace inflation. You screw around with the bond market and a bunch of quote-unquote high-yield savings products, you're not even going to outpace inflation for that 30 years. So no, I'm staying fully invested. I haven't bought off on that. That's a standard financial planning viewpoint, but I don't buy into it. I'm fine with it because, again, you didn't lose your money. I had people say, I lost all my money. No, you didn't. You may have lost 20% of it, but only if you sold. The classic Buffett line of, I didn't lose anything because I didn't sell anything.
Well, and he's been holding on to his money. He was waiting for something like this. I think pretty soon I'm going to be following him, seeing when he puts his cash to work. Dave Ramsey, what a pleasure to see you again, my friend. Thanks so much for coming in. Appreciate it.